That's what you want when you bought Amazon in 2011. That's what you were getting when you bought Apple Computer when the iPhone came out. That's what every rational winner is getting. You want a 10x upside, and then you want, yeah, like I can even live with losing all the money. Although here's the catch. Like every good investment, in my opinion, if you're going to put a lot of money at work, the winning formula for the past 10 years or 15 years has been find a digital dominant network that's dematerialized some fundamental thing. The mobile network is Apple, the information network at Google, the video network, YouTube, the social network, Facebook, even Twitter, speech network, dematerialized, and Amazon, the retail network. You buy them when they're $100 billion market cap. When something hits $100 billion, and when they're 10 times bigger than the next biggest thing, and they're $100 billion, they're probably going to crush everything. And at that point, I remember lecturing Wall Street guys in 2011, 2012 about Apple, and here's what they said. They said, well, we know you love Apple and you think it's going to beat the world. But, our idea is if Apple goes up too high, we're going to sell the stock and we're going to buy HP and Dell so we can diversify your computer portfolio. And then if all your tech names, if Apple and Amazon and Facebook go up too much, we're going to sell those so you don't get too much in technology. Okay, and my answer was, if you think about it broadly, there's no example of a successful company in the history of the world that wasn't a technology company. Standard Oil was a technology company. If you go to Hershey's factory, you'll find they figured out how to manufacture 50,000 candy bars in a clean room, and it's the most sophisticated piece of technology you will ever see in your life. You think they're not technology companies, you're just ignorant. There is no winning investment in a company that's not a technology company at their time. General Electric, there was a time when electricity was interesting technology. Boeing, same thing before we could fly. So the idea you sell too much tech is a foolish idea, in my opinion. The idea that you sell Apple when it gets too big is another foolish idea. Like, well, there's never been a company that was 500 billion in market cap, or trillion, right? There are people saying that. There's never been a company as valuable as Apple because there's never been a company as valuable as Apple. And another way to say that is there's never been a company that could create a software camera, change the way it works, and ship it to 1 billion people overnight for a nickel. And if you could actually ship a product to 1 billion people overnight for a nickel, you could create a lot of value with no cost. So obviously these digital networks, Facebook, Apple, Amazon, you could see them, they're all around us. They're insanely value generating, but there's another dynamic here, which is the network effect, right? Metcalfe's law. It's like as soon as everybody uses Facebook, you can't, how do I get 257 of my closest friends to switch to the next thing? It's really hard. Like Twitter, how do you get all of your followers on Twitter to switch to the next speech network? You think, even if a guy has a massive following on Twitter, you think he's going to switch, to another thing? Probably not.
He's going to be the last person to leave.
So you're buried in concrete there. So now we come back to Bitcoin. Okay, the number one knock on Bitcoin for the outsider is, well, it's just software, someone else can copy it. And I think Bitcoiners, they don't do themselves justice here. I mean, sometimes I think the exchanges and some of the others, they over promote the fact that there's 237 different crypto pairs you can trade, right? And I've done that. It's like that. It's that long tail where all of a sudden there's one thing, and I want to have a list of 47 things, but what's an epiphany? The epiphany is when you're a young CEO and you're like, I'm going to put a salesperson in every single state in America. There's 50 states, 50 salespeople. There's an epiphany when you go to New York City and you realize that half of all the money in the country is in one city. And then you realize that maybe you're being captured by orthodoxy. So in this entire crypto area, it's great to have all the innovation, and it's good to experiment with this and that and DeFi, and maybe that'll work, and maybe that'll work, and maybe that'll work. But to the outsider, you look at it and you're like, well, what if everybody moves their money off of Bitcoin to Ether or to whatever, or to Yo-Yo Coin, and and they stop, and then someone puts this language, 8 pages of language in front of you. What happens if there's a hard fork or a soft fork? You know how debilitating, anxiety-inducing that would be to get to deliver 8 pages of legal disclaimers on hard fork, soft fork risk. Like, you mean like my crypto can float away? And they get all anxiety ridden. So you got to get beyond that. Okay, and but it's easy to get beyond that. The easy way to get beyond it is to say, look, this is a proof of work crypto network designed to be a store of value. And the only thing we're going to do is maintain a constant store of value as a digital gold. And we're going to expend huge amounts of energy to protect that network and upgrade that network. And you can take your $500 million out of the bank and put it on our network, and everybody in the community is going to spend every iota of their energy to make sure no one F's with that network.